Good morning, good afternoon, good evening everyone. Depending when you're watching this video, Alanjal Dubayev is here and I'm going to do some market analysis. I'm going to explain exactly what happened in 2018 and how's that going to affect 2019. We saw a lot of interesting things happening in 2018, right? There was a lot of, fun stuff like market changing. It was fanatic, it was frenzic, it was disruption, right? It was transitioning. But despite all of that, we actually had a pretty good year. Believe it or not, we actually had a 12% increase in home sales prices year over year. Bellingham had 10%, Bremerton 10% year over year, Kennewick 10%, and Mount Vernon 10%. But in the beginning of the second quarter, May, June, July, the market started to change. And in the last 4 months, we saw a very interesting things. It was dramatic. And this chart actually illustrates for Snohomish County and King County, where the dramatic trend began to unfold. We saw the listings inventory goes to the level we haven't seen in 10 years. And we saw the home sales price dropped at the rate we haven't seen in 10 years. But the home sales price, we actually had a little appreciation, slight appreciation. It was kind of moderate of 8%, which is a little less than usual 12%. This is a very dramatic chart that illustrates for Snohomish County, and I'm going to show you the one for King County here in a second. But what we see here is that we saw a deficit in the beginning, in the first quarter of 2018. Closer to April, things started to even out, and after May, we started seeing an increase in the inventory. And third and fourth quarter, we saw the home sales pending dropped. Same thing in Seattle. Deficit in the beginning, and there was a lot of talk going on in the last 3 years of people complaining they don't have enough, we don't have enough listings to provide for them. The demand for buyers' concerns for outweighing what we could bring to the market. But that has changed here in April. A little earlier than Snohomish County, and in the second week of April, we knew the dramatic change is going to occur and some interesting things are going to happen in 2018. And this chart dramatically illustrates a lot of things, so I'm gonna point out some of the highlights, some of the key factors there. So the yellow dots, first and foremost, illustrates the number of active listings that we had right before the crash in 2008 and 9, 2007 and 8. And this chart right over here illustrates the surplus of the highest amounts of listings we've had since the market crashed in 2007 and 8. And in addition to that, we saw the pending home sales and closed home sales drop to the levels we haven't seen since 2010. There was a lot of emotion going on in the market. And I'm going to explain some of the key factors that really shaped 2018 and how's that going to create a momentum for me to explain what's going to happen in 2019. One of the big factors that really affected us here on East Side and parts of the Seattle is that we had investors and families coming in from some of the Asian countries. We've long enjoyed the very strong Asian culture for like about 6-7 years. And combination of investors and combination of the families from Asia, they were sending their children to universities here. But with the difficulties of getting funds from China and the currency volatility between the United States and China, not just the money was more difficult to get out, but it also became more costly. And we saw a dramatic decrease in the amount of investors and families purchasing properties here in Seattle. And that affected our market dramatically. Not just on the high ends of the East Side, but also parts of the Seattle. This chart illustrates other factors that shaped 2018 and also explain in comparison to interest rates. In the first quarter, the market was still trying to digest the new tax benefits, the tax reform, and that actually helped a lot of corporations to pocket some money. They really benefited from it and brought a lot of chunk of money to Americans' pockets. But we saw some of the inflationary concerns, and because of it, we saw some of the changes happening. As the changes happened, we saw the interest rates begin to rise. As the interest rates begin to rise, the affordability went down, but the home sales price have not dropped down. That was the time when we actually saw the market softening a little bit. And in the third and fourth quarter, we saw as the interest rates were rising, we saw some of the trade wars going on and the volatility in the stock market. And that actually solved our market here a little bit. We saw from time and time again in the third and fourth quarter how some of the buyers, many of the buyers were very aggressive in their offers, but then their down payment went down because their holders, their shareholders in Seattle went down dramatically, and their $200,000 down payment went down to $100,000 down payment the very next day. And that affected our market a very big way, and we didn't even realize it. Getting hit the hardest. the metro seeing the biggest slowdown. Seattle actually hit the top 10 in getting hit the hardest market in United States. And we had 7 straight months of housing cool down. It was from May through December. And in spring, the median price of $726,000 went all the way down to $644,000 in November. That was a decrease of 11.3% in just over 6 months. Some of the key factors that will shape the 2019. Interest rates is definitely going to be one of them, because interest rates represent the affordability of the house. As interest rates went up, it actually went up all the way to 5%. 4.81%. Some of the days it was higher, but the mortgage rates were increasing 1% year over year. It started with 0.91, and in just over 4 years we reached the peak point of almost 5%. And just 1%, it represents about $254 in your monthly payments on an average median price of a house of $590,000, and that's over $90,000 in your lifetime of a 30-year loan. That's a big dramatic change. So definitely interest rates is going to be one of the biggest factors. The housing costs. As the interest rates went up, the affordability went down, but the housing prices remained the same. Even though it was normal before, it became very high cost for most of the buyers. So the buyers decided to be smart, and they decided to watch on the sidelines, and that has caused prices to decline and drop. Hence, the next slide, the rising inventory levels. So the inventory levels kept rising, and the sellers, they thought that they missed the peak, and they decided to cash in, and they wanted to rush in to sell, but they were behind the curve. So reducements in the prices were actually a good sign, and if the prices reduce a little bit and the interest rates reduce for like quarter 25, maybe 0.50, that would represent actually a really hot spring for us, which is a good sign. Seattle outlook. Over the past decade, Seattle actually added 220,000 jobs in just over a decade. The 4-county Central Puget Sound region gained 860 people in just over the last year, and that's not counting the natural birth. That's a big sign, and all of those people, they're gonna have, need places to live. So that's a good sign for the buyers, and perfect hot spring right there. Since 2010, the region has gained more than 440 new residents. We are the 6th largest population in the United States metro last year. So this chart illustrates the annual population change in the Central Puget Sound since 2000 till 2008. We see the dramatic increase here. And the next slide actually represents the top 10 cities with the greatest nominal population, and Seattle is being one of them, 600.7K. And about 1,500 on average on the rest of the cities. Okay. Now this chart was actually created by the real estate consulting group John Burns, and what that represents is that the Seattle has a 17% more availability for jobs than the pre-recession peak. And that's again a great niche for us, great science, because job leads to having a job, strong economy leads to strong economy that ultimately leads to a strong housing economy. So believe it or not, Seattle is actually in the normal range when it comes down to new home sales and the price appreciation. We're in the 84% in the normal of the market compared to all the other countries and other states. And that's again a very good sign for us. The recession risks are higher than norm. So a lot of economists, a bunch of professionals, they have did this research, and this also came down by the John Burns and Real Estate Consulting Group. And what that tells us that we have a 53% chance of having a recession in 2 years, and 68% high recession of having in 4 years. But that's again, it's a national data. The market varies to region, from city to city, right? That's why there's 3 rules in real estate: location, location, location. Seattle economy is holding a little stronger, and here's why. Because we have a very strong economy. As I said, we have more than 220,000 jobs added within the last decade. But at the same time, we have the #1 in Seattle has the most cranes in the country, and we have about 65 of the apartments, 65 of the condominiums going on. I believe Chicago is #2, and I believe Los Angeles is #3, being 36. Amazon is a big driving factor in Seattle in creating all these buildings and hiring about, I believe, 9,000 something people officially, but the rumors are going that they're hiring about 14,000 people. And here's some of the other companies influencing the local market, believe it or not. Apple is actually, I believe they bought the 700 2 space, I believe, and they're hiring 500 technological specialists, high-end technological specialists. Facebook and Google, they built the new properties, and Facebook is hiring 3,500 people. Google is hiring 4,500 people. Expedia, I believe, is hiring about 8,000 people right now, and so on and so forth. We have a lot of people hiring, and we have a lot of people coming into the Seattle area. So our job economy is actually going pretty low. So unemployment level is going down, which is a great sign for us, especially when it comes down to housing economy. And this picture will illustrating bullish and bearish. I would say Seattle is actually going bullish. And if you don't know the terms bullish and bearish, it actually comes down, I learned this the funny way, the bull, when they attack, they go up. So the market is going up, and the bear, it slashes down, so the market is going down. And it's the term bullish, bearish. Kind of fun fact. The condos come back. So this chart illustrates that we actually have, after the new legislation of making the favoring the condos, we have 5,000 condos planned to build in the next 4 years. Less than 4 years actually. So the outlook predictions for 2019. Interest rates are going to be number one. I believe the rate is actually going to go up all the way to 5.1%, 4.9 to 5.1%, and that's pretty realistic, and that's a combination of all the economists doing this research together. And NBA, Freddie Mac, and Realtor.com all continue to support that too. The housing market will continue to cool off. I would say it's going to go -2 to -4%. But that's actually going to be a good indicator, as I've said before. If the interest rates go a little down, of the 0.25%, and the housing decrease of a little bit of, we're gonna have a very hot spring. I'm pretty sure of that. The new home development, even it's going to be a little slower, but we'll still have an appreciation of 1.2%. There's a lot of new home development. I believe there's new favors going on, especially for the new home buyers, of teaching them new strategies, new sanctions billing. The unemployment will remain at historical lows. We have so many jobs availability going on. We have so many companies supporting our local economy. So I am not worried about the unemployment at all compared to other states. However, the stock market volatility is very high. Even though we did have a very high volatility that affected the net worth of the buyers in the last year, this year I will say it's still going to be a little bit volatile at the 15% appreciation in 2019. And those are the predictions for 2019, folks. If you have any questions or concerns, or you have any comments, please feel free to leave below. There's actually a video button nowadays on Facebook, so yeah, you can actually, if you don't want to type it in, left a video, give some additional comments. If you have any questions, feel free to reach out at my number, email me, or maybe direct message me or comment under below. Feel free, you guys. Thank you so much for for watching this video. I hope this, kind of gives you an idea of what's happening in the market. And I'll see you guys later. Have a fantastic day.